with it, and it was fun to do that. Kara Murphy, she's Chief Investment Officer at the Registered Investment Advisor, Kestra Investment Management, joining us right here in our studio.
All right, taking a look at the markets. Just over an hour until the close of trading. The Dow is surging up 1.8%. The S&P 500 in the green, up half a percentage point. The NASDAQ barely in the green, higher by just shy of 0.1%.
One story I wanted to get to, and we've talked a lot this hour about the retail sales number that came in stronger than expected, although our Chris Condon reminding us, just one report, there's a lot of other metrics that are out there that are showing weakness in the consumer, getting choosier, holding off, talked about credit card balances and other things. Another metric, and that gets to our one more thing that shows some weakness among consumers, and that is car repossessions, surging 23%, rocketing higher in the first half of the year, a sign of consumer distress as the U.S. Fed weighs interest rate cuts.
Okay, so high interest rates, inflation hit households' budgets. So the spike in seizures gives us a window into the average consumer's financial health at a key time for policymakers. Repos started ticking up last year, Carol. They've now surpassed pre-pandemic levels, up 14% compared to the first half of 2019.
Exactly. And so in this story, it's on the Bloomberg. They talk about vehicle seizures, which are typically triggered after 3 months of missed car payments. They dropped during the pandemic as lenders became more lenient, and stimulus checks boosted borrowers' finances. That was then. While the rate of inflation has cooled, elevated borrowing costs have pushed monthly car payments to near record highs. This is according to auto research firm Edmunds. The average interest rate for a new car is currently 7.3%. For a used car, it's 11.5%. This is, again, according to Edmunds data. So if you kind of extrapolate that, what does it mean for your monthly bills? Now $739 for a new car and $549 for a used car on average. That makes a difference.
Right, consumers being hit on a couple different fronts here. One, higher rate, so it means payments are higher, but also cars are getting more expensive. So if you have higher rates and higher payments, then it's a recipe for a monthly payment that you can fall behind on.
I think it's safe to say, I mean, conversations that we have with colleagues just in and around the newsroom that, you know, people are kind of waiting for the Fed to cut rates and see that kind of trickle through in terms of some of the rates that are out there that are used in borrowing.
Okay, so that if that does happen.
If it happens.
If that happens, many people argue it will happen. So when it does happen, it could allow borrowers the chance to refi or enter the market to buy something else. So we'll see if the trend continues in a lower rate environment.
I mean, this really speaks to, you know, the environment right now. We look at all these different metrics as we go through the earnings season. We heard David Weston talk with BofA CEO Brian Moynihan, who has a really good insight, or has good insight into the consumer. He said U.S. consumer doing well from a credit perspective. So, you know, that is another metric and facet, if you will, that kind of builds a picture of what's going on in the consumer. So trying to get an idea of what happens next in the economy.
Okay, well, speaking of what happens next, we're going to hand things off to the team over at The Close on Bloomberg TV. If you are sticking with us on Bloomberg Radio, we got a great program coming up over the next 2 hours on Bloomberg Business Week.
We do indeed, and looking forward to one of our first guests there who has worked in the public sector, the private sector, worked during the Obama administration, understands the importance of financial markets, business, and trade in particular. So Stefan Seelig is going to be with us, and I'm curious to see how he kind of ties it all together and throw in the political environment too. It certainly is a stacked plate, if you will.
Yeah, needless to say, we got a lot to talk to him about. Also, we're going to check in on the world of luxury real estate because it is so hot right now. What's selling and for how much? We're going to be joined by the president of One Sotheby's International Realty. He's out there in Aspen, Carol, so it's a good sense of the luxury market out there.
All right, luxury market, and then we're going to get into the business of public hospitals. We talk a lot about wellness. We talk about healthcare an awful lot. We are going to be joined by Dr. Dean David Schillinger. He's a primary care physician who says that medicine almost killed him. It's all in his new book, but he talks about the importance of narrative medicine. Basically, it's when doctors talk actually to their patients so they can get a clearer picture of what's going on. So we've got a lot coming up in the next couple of hours. We do that as we look at the markets. Most names in the S&P 500 are higher today. We've got a broad-based rally, so we're going to continue here. As Tim mentioned, S&P up about 31 points. Dow really the outperformer, up 700 points. I'm Carol Masser along with Tim Stanovic. This is Bloomberg Business Week. The close is coming your way in just a moment. We'll continue on radio. This is Bloomberg.
This This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio.
All right, everybody, Bloomberg Business Week continuing on radio, YouTube, and of course, Bloomberg Originals, our streaming service. We've got 60 minutes to go until the closing bell on Wall Street on this Tuesday, July 16th. I'm Carol Massar along with Tim Stenivek. Coming up, we're going to be joined by Stefan Seelig. He is former Undersecretary of Commerce for International Trade at the U.S. Department of Commerce. That was during the Obama administration, but as I just teased, really understands the cross of markets, business, trade, government. We're going to get into it in just a moment.
He's here. He's getting all set up. We're going to be talking to him in just a few minutes. Also, luxury real estate. We're going to talk with the president of One Sotheby's International Realty. How about French Riviera, Carol?
I know.
We talked about that last week.
We did a story about a lot of people actually working from home and buying up properties there. So we're going to get into the high end of the property market. We're also going to talk a little bit about healthcare. A doctor who works at a public hospital talking about what needs to be done to fix our healthcare system. So we're going to get into that in just a moment. First up, though, let's get to the markets.
Hey, well, here's Charlie Pellet for an update on the trade and top business stories. Hey, Charlie.
Well, hello there. Here's a number I never thought I would see. 41,000 for the Dow Jones Industrial Average. We are oh so close. 40,934 right now. We've got the Dow ripping higher here. 59 minutes to go ahead of the closing bell. Up right now by 723 points, up 1.8%. S&P up 31, 56.62. We're on track for a record close on the S&P, up 0.6%. NASDAQ spent much of the day lower, up now by about 0.1%. The NASDAQ 100 index, I'm calling it flat on the day. But the big story, Russell 2000 index of small cap shares up now by 3.2%. Got to keep it locked into Bloomberg Radio to find out where we close, how many records we're going to see when that closing bell clangs on Wall Street. 10-year, 4.16%. The 2-year, 4.44%. Spot gold up 1.8%, 24.64 the ounce. And West Texas Intermediate crude down 1.3%, 80.83 for a barrel of WTI. Stocks hitting records as bets that the Fed will soon start cutting rates fueled a rally in riskier corners of the market. Cameron Dawson is Chief Investment Officer at New Edge Wealth.
If we do 3 rate cuts, does that signal urgency by the Fed? If they're cutting every single meeting, is that because they have to? Does it mean that they're seeing something that we're not seeing? I think that the data today, retail sales holding up, even though inflation's coming down, it warrants letting them have patience because it just leaves the door open for them to do what they want to do in 2025 versus having to continue with this every single meeting cadence.
Cameron Dawson of New Edge Wealth. United Health Group reporting second quarter results that surpassed Wall Street's expectations, even as a key measure of the insurer's medical costs was higher than anticipated. We're going to have more on hospitals and the healthcare system coming up in a moment on Bloomberg Business Week. UNH, United Health Group, up now by 6.4%. It is a member of the Dow up 728, up 1.8%. And again, the Russell 2000 index up now by 3.3%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Tim Stenivek live on Bloomberg Business Week on radio, YouTube, and of course on our streaming service, Bloomberg Originals. We have leaned on our next guest many times throughout the global pandemic and the days following the murder of George Floyd, throughout the twists and turns of the 2020 presidential race, and so much more. He's someone who's worked in leadership roles in both the private and public sectors, including a nearly 30-year career on Wall Street, which is why we love talking about him, about so much of what is the Bloomberg world. He is former Undersecretary of Commerce for International Trade at the U.S. Department of Commerce. That was during the Obama administration, headed up the International Trade Administration. I could go on, but then we'd be done. Let's get to it. Stefan Seelig is back with us, managing partner and founder of Bridge Park Advisors, the financing advisory firm here in our Bloomberg Interactive Brokers studio. So nice to have you here with us. I do always like to lean on you to kind of connect the dots for us. This environment, I'm not quite sure where to start, but it does feel like politics is the right place to start in terms of what might happen in November. Does it matter who ultimately is in the White House come November?
Hi, Carol.
How are you?
I'm well, thank you. Too hot like everybody else, but at least cool in your studio. Look, I think it depends on what the issue is, right? And so some of the things we've talked about in the past, like China. This is one topic where maybe the only topic where Democrats and Republicans seem, quite aligned, which is getting tougher on China. I'm not sure policies will be radically different between a Trump and potentially a Biden administration. I think the deficit ain't going down with either president. I think defense spending is going up with either president. I think as a result of that, from an economic perspective, I'm not sure there's going to be a ton of difference. I think from a political perspective, clearly, President Trump is going to be much more isolationist. He is going to have much stricter immigration policies, and he is going to spend a lot of money. And so I think what all that does, which is why you're seeing the steepening of the yield curve, the so-called Trump trade that you've talked about, and the strengthening of the dollar, is, those are all going to be quite inflationary, especially if he adopts some of these more aggressive tariff proposals that he's talked about, both with China and in imports, which could be Trumpian hyperbole.
Right.
But if it does happen, inflation is going to go up dramatically, and
can you play that out for us? Because I think there's times in terms of, I think of voters who are just trying to pay their bills at this point. But how would that potentially play out and impact the U.S. economy and U.S. citizens?
Well, tariffs are nothing else other than, taxes, right? They're taxes on goods. And unfortunately, they're quite regressive because the people that are impacted most are, the folks that are paying their bills every month in groceries and car payments and everything else. And so prices will go up. There was not a very significant impact in the Trump original set of tariffs because they were not that significant. And President Biden obviously kept them largely in place. So the real question is he going to be much more aggressive in the next term? And if that is going to happen, some economists are talking about 100 basis point, 200 basis point increases in inflation, let alone about the impact and the slowing of the economy overall.
We have seen the narrative shift in the last 72 hours following the assassination attempt on the former president. Gone are the conversations dominated by who's going to replace Biden on the ticket, if anyone. And now the focus has been, especially with the RNC happening right now, on the strength of Trump's position, at least in the polls, and sort of a renewed sense of energy around him. You talk to CEOs all the time in your position at Bridge Park Advisors. What are they telling you?
Well, look, I think you're quite right, Tim, that the narrative has changed on the one hand. But just to go back before we talk about the CEO perspective in a moment, I almost have a counterintuitive point of view, which is the strengthening of Trump from this horrific assassination attempt could, in fact, have an opposite of the Trump trade, which is this could be maybe an accelerant to having a changed Democratic ticket.
Really?
And if that were to be the case, just based on the poll numbers, you'd actually argue for taking the opposite side of that trade, because now, Biden looks so much weaker than even he did after the debate that may force Democratic leadership and the president himself to really reevaluate whether or not he wants to stay in. And I have no perspective on whether that is going to be the case or not, but it is interesting that the strengthening of Trump could have that potential outcome.
Do you realistically see a scenario in the next few weeks where there is a change at the top of the ticket? I mean, the president did reiterate to Lester Holt last night that he's in it to win it.
Yeah, we've all heard the same thing on the one hand. On the other hand, despite what you may think about the president and some of his policies, I believe he is a true patriot, and he wants to do the right thing for the country. And if he becomes convinced that he is not going to be able to beat Donald Trump, he may change his mind. Because at the end of the day, this is not just a narcissistic decision. It is a decision that many people believe is going to fundamentally affect, and I'm sure he does, the direction of this country. Going back to your question about CEOs, what I would say is, first of all, most Fortune 500 CEOs are Republicans. So, I don't know, polls have been taking 75% are Republicans. So you're starting with a base that most CEOs of big companies would vote for Trump kind of along party lines on the one hand. On the other hand, for this particular candidate, in the conversations I've had, I don't see much enthusiasm. For one, I don't think they appreciate his style. Two is some of these policies. CEOs are not isolationist. They are not xenophobic. They are not protectionist. They don't like tariffs. And so they don't like all of the social policies that are being talked about, for example, LGBTQ rights. And so while I think on the one hand, many of them are seeing the writing on the wall, and as a result, not standing up and lining behind President Biden. On the other hand, I don't think there's a lot of enthusiasm for this particular president as much as there is enthusiasm for traditionally centrist Republican policies as a way to drive corporate profits and corporate prosperity.
One of the things that we've been talking a lot about is kind of the establishment folks in Silicon Valley, or really in kind of the venture startup world, and their backing of Donald Trump and J.D. Vance, it seems like at this point. Why do you think that they appeal to them? Is it tax? What is it?
Well, part of it is J.D. Vance, had a job in Silicon Valley for a while, and so I think there is a little bit of a connection that he has personally with some of those folks.
But Peter Thiel and Elon were backing Trump for a long time.
Yeah, and I would say, frankly, Carol, those are not really representative of the Fortune 500 establishment. Traditionally, now it may be the new world order, but it certainly wasn't the world order of the last generation.
Well, is it important to make that distinction? Because it's interesting; they're in the headlines a lot.
Sure, but they're in the headlines a lot because of the huge wealth and success of Elon Musk and a number of other folks that like to comment on this. But traditionally, corporate CEOs are going to be much more reticent for making public political statements,
right,
because it's kind of not their lane and not their job. So as a result of that, you kind of have the squeaky wheel sort of phenomenon where you have folks like Bill Ackman that like to comment on these things, and Elon Musk because of X and other things that likes to comment on these things, where traditional corporate executives, I think, because their customers and their clients are both Republicans and Democrats, are quite chary about being as vocal.
Remember the Whole Foods founder who we spoke to?
I was just thinking about that.
Yeah, we spoke to John Mackey a few weeks ago. He's got a new book out, and in the book he writes about the time that he weighed in on Obamacare and how it was such a disaster. And he said the board told him, never again, ever, ever
don't touch
weigh in on anything.
The cutest story, Tim, that I've heard about that was a comment that Michael Jordan made.
Yeah.
And he said, guess what? Both Democrats and Republicans buy sneakers.
Yeah. Hey, well, speaking of that, we did just speak to Kara Murphy over at Kestra Investment Management, and she encouraged our listeners and our viewers to look beyond the election and argued that who's in the White House really doesn't matter when it comes to financial markets. That said, we spoke to Reid Hoffman, the LinkedIn founder and billionaire, about 6 weeks ago over at our San Francisco conference, and he said it absolutely does matter because he's concerned about a lack of stability as a result of a Trump presidency. What side are you on? Does it matter who's in the White House?
I think of course it matters, but you also have to ask that question in conjunction with what happens to the Congress. And is it going to be a divided government or not a divided government? Because that is a natural check and balance that I think will cause some of the more extreme outcomes from taking place. What I would say is, the United States position in the world will clearly be different between these two governments. And former President Trump and President Biden have a different worldview in terms of cooperation, internationalism versus isolationism. And that is going to impact not only the citizenry, but impact businesses in many respects. And so I don't think it can be ignored. I am not quite as alarmist as some folks in terms of the end of democracy and civil war and some of the other things that some people are talking about. On the one hand, I do think this is an important election, and we need to be rightly talking about the issues.
Stefan, do you feel like you worked within the government, the Obama administration? Do we still have checks and balances? And will we still, depending on who's in the White House come November?
Obviously our system hasn't changed. What has changed, Carol, is we used to govern from the middle. Mm-hmm. And now we're governing from the extremes in both parties. And that is what creates a lot of, I think, these tensions and a lot of our ineffectiveness in terms of our ability to implement any policies. And I think, frankly, and this is my personal point of view, until we get back to the middle, we're going to have some real issues, because that's what creates the animosity and the ability to collaborate. And when President Biden was in the Senate, he was notoriously well known, and rightly so, for actually being able to collaborate across the aisle. And you don't see that from either party at the moment, and I don't see that changing with this election in either direction.
You did say until we get back to the middle, which strikes me as really optimistic. Do you see within, I mean, it's not
I think he said he was an optimist.
within our lifetimes we get back to the middle?
I don't know, Tim. You may as well be hopeful, because it's better than the other choice.
Yeah.
That's fair. Your clients, what do they ask you most about? And what are they up to?
Well, I think at the moment, as you rightly said, there was a whole conversation around what was going to happen on the top of the Democratic ticket, then the implications of the assassination attempt, clearly. But I think there's still a lot of uncertainty in the economy. And you guys spent a lot of time, understandably, talking about the markets, but the markets and the real economy are divergent. And the fact is that despite being at all-time highs in the equity markets, consumer sentiment is not high. Savings are being depleted from the pandemic relief. Inflation is going up, costs to consumers are going up, car payments, mortgage payments are higher because of interest rates, and that's creating a real sense of a lack of prosperity with most American households. And households, Carol, you know this, households don't own a lot of stock.
Right.
So all of that good stuff that we talk about in the equity markets really doesn't impact households traditionally. And even that high equity market, and you guys talk about this all the time, it's really technology.
Right.
And it's not just technology, it's a handful of companies in the technology sector.
If you could change one policy that would help more Americans, because you're right, the market is not Main Street, what would it be, though?
Oh, it would be a political thing, and I'd probably have term limits to have us govern more effectively.
Yeah.
So I guess that would be my answer.
We just talked about car repossessions rocketing higher in the first half of the year. Carol asked you about one policy you would change. Though in the last 30 seconds that we have, why do you think that so much of America is struggling at a time when the economy is so good for so many people?
Well, I don't know, Tim. Is it so good for so many people? There's a real wealth gap, and it's good for a lot of, I think, your listeners who occupy a certain economic position in this country, and I'm not so sure it's so good for so many people. A lot of people are struggling, and that is why this populism that President Trump and J.D. Vance espouse has become so popular. And I think, we can't ignore that. And, we can all have stylistic concerns and concerns about some of their policies, but the people, the Americans that they are talking to, really feel what they are trying to address.
Yeah, I think it explains very much the political environment that we are, not just in the United States, but really globally, right, in terms of people not feeling that they're doing better.
For sure. And, Brexit, the elections in France, et cetera, et cetera. I mean, this is a global phenomenon.
Thank you. As always, Stefan Seelig, he's managing partner at Bridgepark Advisors. Quick headline on our way out, folks. Elon Musk saying SpaceX will move its headquarters to Texas from California. So tracking that for you on this Tuesday. I'm Carol Massar along with Tim Stenovic. This is Bloomberg Business Week.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. A rally underway with the Dow, the S&P, yes, NASDAQ, all advancing right now, right to the numbers, because we're looking at big gains for the Dow Jones Industrial Average, up 720 points right now, closing in on 41,000. The Dow, 40,933, up 1.8%. S&P right now up 28 for the S&P 500 index, a gain of 0.5%. NASDAQ little changed, holding on to an 8-point gain. NASDAQ, to be sure, has been swinging between gains and losses for much of the day. Look at the Russell 2000, up 3.3% right now. Small cap shares surging. 10-year, 4.16%. The 2-year, 4.43%. Gold now up $41 the ounce to $24.63, up by about 1.7%. And West Texas Intermediate crude down 1.3%, $80.77 for a barrel of WTI. Stocks climbing to records as the Fed, on bets that the Fed will soon start cutting rates, fueled a rally in riskier corners of the market. With the Republican National Convention underway in Milwaukee, the elections and markets, what to expect. Kara Murphy is Chief Investment Officer at Kester, and she was a guest right here on Bloomberg Business Week.
Typically what we see is a kick up in volatility late in the summer prior to the election, and then markets sort of take off before the election actually happens. So we've been counseling people to be aware of this. It can still be a really good market environment, but it can be a bumpy road along the way.
Kara Murphy of Kestra. After earnings, shares of Morgan Stanley up now by 1.5%. Bank of America after earnings surging 5.4%. Charles Schwab shares heading the other direction after earnings, dropping 9.7%. Recapping, got to mention the Russell 2000 again, up 3.4% right now. S&P, to put that in context, up 0.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie Pellet. Do appreciate it. Well, you all might remember on Friday, Carol and I were talking quite a bit how we plan to move to the French Riviera to
Kind of
broadcast our
obsessed
show.
over this story.
Okay, before we were even done talking about it, we got a message from management that said, no, don't even think about it.
No remotes.
The
no
reason we
moving.
were talking about it, though, is because the French Riviera is so hot right now. Prices of homes valued above $16 million along France's southeastern coast rose between 15% and 20% in the 5 years through 2023, outperforming the 13% gains in London in the same period. That's data from broker Beauchamp Estate Show. For a view of the luxury real estate market closer to home and around the world, too, we welcome back Daniel De La Vega, president of One Sotheby's International Realty. Daniel joining us from Colorado. Daniel, how are you?
I'm great. Thank you for having me back. Excited to be back on the show.
Well, Sotheby's International Realty just out with its mid-year luxury real estate report, and it shows that luxury properties are performing better than non-luxury properties. Is this all just because of rates and the folks that you're selling to don't care about mortgages?
You know, the folks that we sell to do care about mortgages, right? Their businesses are affected by mortgages, but our luxury market in South Florida is performing better than any other. I mean, definitely performing better than the French Riviera. I heard you guys just talking a little bit about that. Our single-family home market, the $10 million plus market, for sale product is up 30%, sold is up 35%. Pendings are up 30%, and the average price per square foot is up 11% to $2,400 a square foot. Those are unheard of for our market. And then on the condo side, it's even higher, right? For the $10 million plus market, for sales up 37%, solds up 20%. Pendings are flat, but the price per square foot is up to $34.51 per square foot. And that's inventory that's on the market. Those are numbers from the local MLSs. That doesn't account for new developments, which trade for traditionally 20 to 30% above what's on market. So, you know, interest rates aren't really affecting us. I think that everybody's kind of bullish that interest rates are going to go down. And like they say, interest rates are temporary.
All right, interesting. I do wonder, though, if rates go down and people kind of like, it doesn't pay as much to leave my money in cash, although we're not, down to zero or anything like that. Hey, having said that, Daniel, what's always important, I feel like when we have a conversation with you, this is a very kind of narrow part of the real estate market, although obviously a luxe one and a high-end one and a pricey one. How does it compare to pre-pandemic levels, what we're seeing today?
Oh, you have markets that are up 300% in some instances. I mean, it is a completely different market, especially in Florida. All the job creation.
So stronger, hotter than it was pre-pandemic?
Way stronger, way hotter. Yeah, I mean, those numbers that I just gave you were year-to-date numbers. So we've had an incredible first half of the year here in Florida, and most of my colleagues that I speak to across the U.S. I mean, I'm sitting here in Aspen, Colorado. The market's performing incredibly well, and it's a lack of inventory. People don't have homes to sell. People don't want to sell their homes. They have locked-in low mortgage rates, and while mortgage rates are coming down, we're very bullish that they are going to come down. We saw the CPI numbers close to 3%. We saw unemployment up to 4.1%. We're bullish that they're going to come down. Canada's about to lower for the second time, and inflation hasn't come down after the first. So very, very positive outlook from that standpoint, but it's an inventory crunch. There's still not a lot of inventory on the market. Most markets are averaging still below a 6-month supply, which is what we look at as our baseline average.
Daniel, is the idea of climate change, rising sea levels, increasing volatility of storms, is that on the radar at all of your clients in South Florida?
It has its moments. You have sometimes articles published about sea level rise and things like that, and we're trying to be as resilient as we can in Florida. It definitely has infected insurance prices. Insurance prices have doubled, sometimes tripled, especially waterfront properties that need wind mitigation. So, it's something that's it's on a case-by-case basis, but it's not something that's happening at a more macro level. You're seeing people talk about it as they price their insurances, say, whoa, this is a lot more than I expected. But, the same thing goes for taxes in Florida, right? I mean, taxes in Florida are high compared to other states. We average 1.875% as property tax. States like Colorado, they have very low property tax, but we still continue to have people want to purchase, want to live, want to build their careers in Florida. So, it's something that I think is going to be temporary. It's going to have to be fixed at a federal level, and I'm bullish that our government will fix it.
You think insurance has to be fixed at a federal level?
I do, especially in Florida. Yeah, it's going to have to be a federal issue.
That's interesting, because Texas and California are also running into some serious insurance issues. Here in New York, too, I think a lot of homeowners would say that their insurance rates have gone up.
Texas?
Yeah. I mean, I just play that out a little bit for us about how that would work nationally, because that's an interesting solution that I haven't heard about.
Look, I don't know how it would play out. I'm just hoping that the Fed does get involved at some level, create some subsidies for us so that we can make insurances across the country affordable, because while it's up 3 times in Florida, to your point, it is up. It's not 2% of property value, but it's still up in Colorado. It's up in Texas. So, I think there'll have to be some sort of subsidies created at the federal level.
What might surprise someone who is listening right now, the Bloomberg audience, about your world?
I was looking at some, the election is a big topic. And I think what people fail to realize is that property values have gone up in 9 out of the last 11 elections. And 8 out of the last 11 elections, mortgage rates have gone down. So I'm very bullish that with interest rates coming down, statistically speaking, they go down, and then the pent-up demand after the election, and again, statistically speaking, there's a lot of pent-up demand, and you have 9 out of the last 11 elections, an increase in property values. I think we're in line for a really, really good, strong Q1 2025. We might see a little bit of a slowdown, pre-election. Interest rates are obviously going to help with that. But still, I think the first quarter of next year is going to be really, really strong, and we're very bullish on what's to come.
What's the, outside of the South Florida market, what's another market that needs to be on the radar of our audience?
I keep reading that New York's a buyer's market. I'm still very bullish on New York. I love Manhattan. I think the arts and the cultural scene are out of this world. The restaurants are still great. The people are still great. They have some of the best colleges in the world. So if it's a buyer's market, like everybody's saying, I would double down on Manhattan.
Interesting. Okay. Some optimism about Manhattan.
Yeah, exactly. Really interesting.
I just have a long-term view on things in general when it comes to real estate, right?
Hey, one last question. Who are mostly your buyers at this point? What's the demographics of it? Is it folks in the United States? Is it global buyers? What is the age? What can you tell us?
Yeah, we're still seeing a lot of Northeast buyers. We're seeing a lot of millennial buyers, actually. I think this $16 trillion, the generational shift of wealth, I think is a really big deal from the baby boomers to the millennials. We're seeing a lot of properties being bought in trusts, right? We're seeing a lot of that in the new development space. We represent a lot of new developments along the east coast of Florida. And then, Canada's still the #1 buyer in Florida, although they buy at a lower price point. We're seeing Texas, we're seeing a lot of California, and Mexico. Mexico's a huge, huge market for us.
Yeah.
And then Latin America's always been a big market for us, and it kind of depends on what's happening at a local level in the countries in Latin America.
All right, we're going to leave it on that note. By the way, Elon Musk might be looking for a house in Texas because that's where he's moving his SpaceX headquarters
He's
to
been
Texas
out
from California. I know he's been out anyway.
I mean, yeah.
And did he sell all his homes also?
Yeah, he's been out.
Trying to make a segue.
I know, but
killed me
I
there.
do think this is more symbolic than
Yeah.
it is. I mean, Tesla's already moved
I know.
production there.
Just
Yeah.
move
Sorry,
on.
I don't mean to rain on your
Nah,
parade.
that's
but,
all right.
just
It's
take
kind
it
of
with a
that
grain
kind of a
salt.
day. Daniel, be well. Daniel De La Vega, he's president of One Sotheby's International Realty, joining us from Colorado.
All right, we were talking about Elon Musk because he does say that SpaceX will move its headquarters to Texas from California. Check out more on the Bloomberg terminal. In the meantime, a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 newsroom in D.C. Hey, Amy.
Hi, Tim. Democratic Senator Bob Menendez of New Jersey was found guilty of corruption charges related to the FBI seizure of 13 gold bars, nearly $500,000 in cash, and a Mercedes-Benz at his home. Menendez says he's disappointed in that verdict.
I have every faith that the law and the facts did not sustain that decision and that we will be successful upon appeal.
Menendez was convicted on all 16 counts after a 2-month trial in New York. Jurors reached their decision after 3 days of deliberations. Menendez faces up to 20 years in prison on the most serious charge. The judge set a sentencing date for October 29th for Menendez and his 2 co-defendants. He's certain to appeal. Senate Majority Leader Chuck Schumer now calling for Menendez to resign. The Republican National Convention heads into its second day, now with Donald Trump officially as its nominee. Bloomberg's Laura Davison on what we can expect tonight in Milwaukee.
The theme is all about Make America Safe Again. So last night was all about the economy. Tonight is going to be about crime, border, immigration.
Laura Davison speaking with Bloomberg's Joe Matthew and Kaylee Lines. Vice presidential nominee J.D. Vance is expected to give his own speech tomorrow night. Trump will headline Thursday night. Congress is gearing up for a multi-committee investigation into the attempted assassination of Donald Trump. Ohio Congressman Jim Jordan says he has questions.
In one of those buildings where bad guys could do bad things, we had the good guys on. We had the counter snipers. So there's a pretty small number. The fundamental question is, why weren't they secured, right? And that's what all the experts tell us. Those buildings should have been secured within a certain, so many yards out.
House Oversight Committee Chair James Comer saying that Secret Service Director Kimberly Cheadle will be appearing at a public hearing on Monday. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris and this is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got a powerful, broad-based rally underway. 20 minutes to go ahead of the closing bell. The Dow ripping higher, S&P trading at a record, NASDAQ also advancing, but perhaps the biggest story of all, the Russell 2000 index of small cap shares. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. Stocks in the green with the Russell 2000 really outperforming today. The Dow is currently up 729 points. S&Ps are higher by 2. NASDAQ is higher by 0.1%, but the Russell 2000, that's up 3.4%. The U.S. 10-year yield at 4.17%. Gold is up 42. Oil trading in the red, and Bitcoin, that's higher by 1.8%. Among the main 11 S&P sectors, tech and telecom were in the red, and leaders to the upside in the Dow. UNH rose 6% after earnings, while Merck fell 1.8% and led to the downside. Also after earnings, Morgan Stanley rose 1.6%, while Schwab fell 9.7%. And wrapping things up, some of the names reporting after the bell tonight include Interactive Brokers and J.B. Hunt. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over your Bloomberg, type squawk, SQUA on your Bloomberg terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
Start funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. Coming up on 18 minutes left in the trading session, getting ready on just a bit. We're going to head over to our TV colleagues, counting down to the closing bell on this Tuesday. In the meantime, we're going to talk a little bit more about this trade.
Yeah, we got Christy Akulian with us, head of
Connection
iShares
lost.
Investment Strategy over at BlackRock. Christy, good to have you with us. iShares just out with its mid-year. Everyone's out with their mid-year report.
I know, what is that?
It's because it's the mid-year.
Oh, it's the mid-year.
That's what it is, yeah. You and the
Can
team
we do
write
a mid-year
that.
report?
Report card?
Oh.
Yeah, mid-year
We
review.
do have mid-year reviews.
Yeah, I was going to say, you better get on top of that if you don't know we have that.
We do have that.
Christy, I do want to talk about the iShares mid-year report because you and the team write that since our last outlook in March, a broad sampling of data reflects a U.S. economy with substantial growth momentum. How much momentum does the economy have?
Yeah, and thanks for having me. It's so great to be here today. So I mean, I think that one of the biggest differences from what we were talking about earlier this year, and certainly coming into this year, is really just that the economy has remained a lot stronger than expected. So we've really taken out a lot of that left tail in terms of the recession risk. And so we've seen the economy, it stayed a lot stronger than expected. And I think that it's in a really benign deceleration mode right now. So we do expect growth to slow, but we don't expect it to slow so much that we're going to get that bumpy or that hard landing that maybe investors thought we were going to get in December.
No recession at all?
Right now, it certainly doesn't look like it. Right now, it does paint more of a soft landing picture. And I think that that's part of what encourages us in this mid-year outlook, as you referenced, to lean into risk. But I think that there's a difference between leaning into risk and then just indiscriminately reaching for risky assets. And that's certainly not what we're talking about. A lot of the themes that we're talking about there are quality. So something like QUAL is a ticker that we have had top of mind and top of investor minds as well, too. As we think about staying invested and leaning in a little bit, but doing so in kind of a sensible way that screens for higher quality.
Christy, what was the moment or the piece of data, or what happened when you said, we're going for a soft landing, we're full on soft landing here? What was that moment that you decided that this was the narrative we're going to adopt?
I don't know if it was one specific moment so much as a collection of moments and data that we've gotten over the course of the year. So maybe kind of an unsatisfying answer. I think GDP growth came in a lot stronger than we expected in Q4, a little bit softer than expected in Q3, but still twice as strong as investors expected coming into the year. So, I think maybe that headline number matters. But yeah, I think it really is just the broad sampling of data that makes us feel more comfortable that it's not just that one single data point.
You know, it's interesting. I'm looking at the iShares quality, as you said, QUAL is the ticker. And, you know, if I look at some of the holdings, they're well-known names and some of the big mega cap tech names that have really pushed the overall market higher. So it's NVIDIA, it's Apple, it's Microsoft. To be fair, there's also Visa. Meta's also in there. Costco, Johnson & Johnson, and I'm looking at a performance over the past year that's up about 29% here, 5-year up about 15% on average annually. You know, it's kind of interesting. Does it still make sense to be somewhat passive and just buy the market at this point?
You know, it's a great question, and I think it really depends upon investor preference here. I think there's a lot of investors that we speak to who do prefer an index exposure, and for that, we like quality. For investors who maybe are comfortable taking a more active approach, we've got some great offerings there. The one that we've been talking about a ton and really, I think is made for these times is DYNF. So that is our dynamic factor rotation fund. It still looks a lot like quality right now, but because of that active management tilt and strategy that it follows, it can change a lot more quickly than an index fund can. And so what we're seeing is that as we're approaching this period where is the Fed going to start to cut? Is inflation going to start to fall? We're seeing these inflection points kind of form in the market and on the horizon. And I think that investors who want to be able to take advantage of that are leaning more into active strategies, and we've seen that in the flows.
Help me out, though, because I look at the top holdings in this one, and it's a lot like the last one we just talked about, QUAL, NVIDIA, Microsoft, Apple, Visa, Meta. So help me understand, constantly it's really some of these large mega cap names that really provide the momentum for, even though you call them different things, it's really the same names that are really moving the needle.
A lot of the same names, it's at slightly different weights. And I think the importance is the rebalance frequency as well. So yes, the active fund looks very similar to the quality index fund right now because it chooses to be in higher quality names. What can change pretty rapidly, though, is it's actually started to dial back a little bit of its quality preference, and it started to tilt up a little bit of its value preference. So that faster rebalancing schedule just means that it can move more quickly with the markets, even though, all of these funds are going to, in broad strokes, still sort of represent a market cap weighted index as a starting point. And then they're going to make adjustments from there.
How are you thinking about themes that you don't have ETFs for right now? What's when you go into the room at BlackRock and you talk about, themes that you want to sort of adopt moving forward, what's interesting to you?
Yeah, so there's a lot of growth in alternatives, right? I mean, I think that is a big part of the focus. Right now, I think we're talking more about some of the liquid alternative strategies. So things that can still be, invested in via a mutual fund wrapper, for example, and that can still offer sort of daily liquidity and whatnot. But I think that as the market matures and as, the ETF industry expands and also other fund wrappers, we're looking at things like private markets as being opportunities and where and how those can fit into different investor portfolios. So I think a lot of the excitement and sort of the new frontiers, if you will, are sort of in that alternative space. But, even now, if you just look at some of the launches, if the proof is in the pudding, if you will, a much larger share of ETF launches don't look like ETFs in the past. So about 41% of all launches that we've seen so far this year have been active. And that just lets them do different things and play in different markets than maybe people thought about ETFs traditionally. So even within the ETF wrapper, the investment profile is changing. And outside of it, I think it's looking and pushing that frontier in terms of alternatives, liquid alternatives, private markets, things like that.
I mean, what do, like when you guys talk to institutional clients, just got about 25 seconds left here, or investors in general, what other kind of devices or ETFs are they looking for to play around with in this market? Just real quickly.
Yeah, again, I think a big part of it is active strategies, but outcome strategies. So things that are using derivatives to either enhance income or define more specific outcomes. I think that's a really quickly growing category for a lot of investors and institutional in particular too. And a breaking news for you here is just today, iShares reached $4 trillion globally in assets under management. So that's
right.
a new stat.
All right. Well, we'll take it. Hey, listen, thank you so much, Christy Akulian. She's head of iShares investment strategy over at BlackRock, joining us from San Francisco. All right, folks, just got about 10 minutes left in today's trading session, and we're going to count you down to the closing bell on this Tuesday. Carol Massar along with Tim Stanovic. This is Bloomberg.
Company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Americans spent more than 40% of their TV time streaming movies and TV shows. That is the highest percentage ever for online viewing, with Netflix registering the biggest increase in market share now, according to researcher Nielsen. Streaming viewership increased 6% from May, boosting the share of overall viewing by 1.5 percentage points. Broadcasting lost 1.8 points, while cable fell by 1 percentage point. Morgan Stanley's traders joined the party across Wall Street in the second quarter, posting gains from a year earlier that beat expectations, even as the firm's larger wealth business fell short of estimates. Morgan Stanley today up by about 0.5%. Bank of America missed estimates for net interest income in the second quarter, but said the key metric will climb by the end of the year. We had shares of Bank of America up now by 5.3%. And earlier today, right here on Bloomberg Radio, we caught up with Bank of America CEO Brian Moynihan.
If you look across the loan categories, credit card growth was decent. Home equity growth is kind of bouncing along because consumers aren't using their home equity loans yet. They may. Mortgage lending activity were relatively flat there. You go on the commercial side, the great news is we grew small business and business banking, which is our $50 million segment. It grew for small business for the 20th consecutive quarter. We're the #1 small business lender, despite what you hear. We are the largest small business lender in America.
Bank of America CEO Brian Moynihan, and again, shares of Bank of America up now by about 5.3%. After earnings, Charles Schwab shares down now by 10%. Schwab reported that fewer clients opened new brokerage accounts than analysts had expected. Those are our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio and Television.
All right, everybody, just about 5 minutes left in today's trading session. We're going to head over to our TV colleagues. Count you down to the close on this Tuesday, the closing bell in just a moment. Having said that, just kind of scanning the most read stories on the Bloomberg. What's jumping out for you?
What's jumping out is the most read in the last hour and the last 8 hours. It's a story that actually broke while we were on air about Trump security tightened, I should say, on Iran plot intel, no link to the rally. The U.S. Secret Service boosted security around former President Donald Trump after picking up intelligence in recent weeks of an Iranian plot to assassinate him. People familiar with the matter said, adding that the threat was separate from the attempt on his life last weekend.
Interesting that that's coming out now. There is no indication of any link between the Iranian plot, and Thomas Matthew Crooks, of course, the 20-year-old man accused of shooting and wounding former President Trump at a rally in Pennsylvania over the weekend. Sniper teams, of course, killed him in seconds after he opened fire. But the Iranian threat, can't even say it today, appeared to be linked to a broader pattern of threats against former Trump administration officials that stemmed from the U.S. killing of Qasem Soleimani, the head of Iran's Revolutionary Guard Corps, in January of 2020. This is coming from the Biden administration.
Yeah, Soleimani was assassinated in a drone strike that was ordered by Trump. Here's what National Security Council spokeswoman Adrienne Watson said in a statement today, quote, "We've been tracking Iranian threats against former Trump administration officials for years, dating back to the last administration. These threats arise from Iran's desire to seek revenge for killing Soleimani."
Yeah, it's interesting, too, if you think about some of the security that has stayed in place for some of the members of the Trump administration. U.S. has maintained security details for several one-time Trump administration officials, including former Secretary of State Michael Pompeo, John Bolton, who served as National Security Advisor. So there's additional individuals that certainly the government continues to protect.
Yeah, a couple of years ago, back in 2022, the Justice Department charged a member of Iran's Islamic Revolutionary Guard Corps in connection with an alleged plot to assassinate Bolton. CNN earlier reported the Iranian plot and said that the intelligence on the plan came from a human source.
All right, good to know. This is certainly our most read story in the past 60 minutes. Also on this list, the S&P 500's $18 trillion rally is broadening out. We keep talking about what we've seen in small caps in particular. So we're going to talk about what's been moving here, certainly in the trade. We're going to head over to our TV colleagues and do that. We definitely have seen a broad-based rally. If I look at the number of names in the S&P that are actually trending higher on this Tuesday. Do not go anywhere. Tim and I joining our TV colleagues. Closing bell starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic and Alex Steele are here to help take you through the closing bell. It's a global simulcast starting now. Scarlett Fu joining us in the TV studio. Carol Massar and Tim Stenivek in the radio booth as we bring together our audiences across all of our platforms, including our partnership with YouTube. Carol Massar, another phenomenal day if you're a small or mid-cap stock, particularly relative to what's happening with the larger cap brethren.
Yeah, the outperformance, right, that we're finally seeing in small caps. We've been talking about them, I feel like, forever, guys. We're seeing investors move into it. Once again, though, I'm going to highlight also the financial sector, because you're looking at the KBW Bank Index up almost 5% in the last 2 days alone, and that compares with about not even quite a 1% gain in the S&P 500.
Yeah, the Russell up 3.4% right now, up about 11.5% so far this year, which is underperforming the major indices. Well, underperforming the S&P 500 and the NASDAQ. I got to tell you, I feel bad for anyone who has to do decliners today because the rally is so broad-based.
Meaning you?
Meaning me, yeah.
No, whatever. You got Schwab. You're fine.
I got Schwab. What else do I have?
You've got lots of talking points tied to Schwab. It's so interesting you point out the gain in the Russell 2000 for this year, because much of that has come in the past couple of days. Since Thursday, the the June CPI report came out. The Russell 2000 has gained 10%, and Mag 7 have fallen almost 4%.
Yep, Russell 2000 beating the NASDAQ 100 by almost 11 percentage points just in the last 4 sessions, not counting today. Haven't seen that since 2011.
The cross-asset moves with yield slightly lower here. Bitcoin higher on the day. The VIX a slight tick higher as well. Nevertheless, you are looking at record highs, at least for 2 of the major indices here on this Tuesday afternoon. The Dow Jones Industrial Average looking to finish out the day up by more than 700 points, or about 1.8%. A run closer back to that 41,000 level, 40,958 and change as we wait for the numbers to settle. That is a record high. 566.7 on the S&P 500, up 36 points from where it was yesterday, also a record high. The NASDAQ Composite up about 36 points, or 0.2% here on the day. And the Russell 2000, which is still about 200 points away from claiming its record high, getting ever so closer to that 5 straight days of gains, including a 3.5% gain here on today.
All right, for all you technicians out there, maybe no surprise, though, to see that if you look at the RSI on the Russell 2000, you are seeing it overbought at this time, so piercing above that level. Back to the big caps, though. Scarlett, you're going to get into the major industry groups on the S&P, but most names, in the S&P actually gaining ground today.
Yeah, absolutely. And you see the weak links of the S&P 500 in the IMAP here. They are the 2 biggest sectors within the index. You have tech and communication services, each down by at least 0.4%. But your broad advancers are industrials, materials, and consumer discretionary, all gaining at least 1.5%. And it's worth noting, too, that for the Russell 2000, all 11 industry groups are higher by at least 1.5%.
All right, guys, let's get to some of the individual gainers. Match Group, certainly among the top gainers in the S&P 500 today, finishing the day with about a gain of about 7.5%. This is after Starboard Value built a stake in the company, becoming the 3rd activist investor to do so, to take a stake in the group, in the company specifically. Starboard has about a 6.6% position in Match, and the investor plans to push for a sale of the company. So tracking
which Match Group app do you use the most, Carol?
It depends on the day. You know, it depends kind of in my mood. There's just so many. Moving right along. Bank of America up 5.3% in today's session, rallying, moving to the highest in more than 2 years. We heard from Brian Moynihan sitting down with David Weston, talking about the consumer, talking about the lending environment. Company did report trade and investment banking results that topped analyst estimates, did give a forecast for NII, net interest income, its biggest source of revenue, that also exceeded expectations. Another banking name, State Street, up about 7.3%, finishing at its highs of the session, up after beating revenue and net interest income expectations as well for the second quarter, even amid some high expectations. So that's an outperformer. And just one more earnings name I want to throw in there. United Health up about 6.5%. This is after the company reported second quarter adjusted profits that topped estimates, even as the firm saw medical costs that were higher than Wall Street expected. Can I say I like Tinder? No, I don't like Tinder. Okay, moving right
You
on.
don't like Tinder? No, Carol, you can't say that.
I don't say that.
You like the veggie one. There's like veggie friends or something.
That's the name.
Not veggie.
like
Something
that.
like that.
Yeah, exactly.
All right, moving right along. I think,
Swipe right for
Scarlett, I
broccoli,
think you were the one
left
who
for
called that. I do have Schwab today, finishing the day down 10%. Shares suffering their biggest intraday drop, going all the way back to last year's regional bank crisis. That was back in mid-March. This after Schwab warned that it will have to shrink itself in order to protect profits. So going forward, Schwab is planning to rely more on off-balance sheet arrangements to house customers' deposit. This is according to Walt Bettinger, the company's CEO. By relying on partners like Toronto Dominion Bank, deals would allow Schwab to more efficiently use capital, he said. Investors not cheering the results after that earnings call this morning. Shares down more than 10%. Also, shares of DJT rallied yesterday, but they fell today, fell 9%. This after the owner of Truth Social registered 38 million shares that could be sold as part of a pact with Yorkville Advisors. The registration relates to a pact unveiled on July 3rd that would potentially dilute existing investors to sell $2.5 billion in common stock. As I mentioned, shares rallying double digits yesterday. And ticker PGR, Progressive, also in the red today. Shares fell after reaching the highest intraday level on record. Shares down more than 3% today. This after the insurance company reported second quarter net premiums earned that came in ahead of estimates. So good earnings, but shares fell after reaching the highest intraday record level on record, Alex.
See, you got it. You did stuff. There were definitely some
Slim
decliners,
pickings.
thanks to Charles Schwab. All right, going to the bond market here, you saw buying across the curve, so that steepener trade taking a bit of a break today. 2-year yields down by about 3 basis points. 10-year yield down by about 6 basis points. So we'll see. We'll see what happens tomorrow after we've seen that steepen over the last 4 days. Taking a break today, TBD.
All right, guys, you know how we got the retail sales number coming in stronger than expected. Having said that, we talked with our Chris Condon of the Bloomberg economic team and basically said, you know, all right, it's one data point, but what we are seeing is a lot more metrics that are showing some consumer weakness. And there's a great story on the Bloomberg about car repossessions that they're up 23% in the first half of 2024 compared with last year. And you're seeing signs of increased stress when it comes to consumers and higher interest rates certainly playing into this, Tim.
Okay, so let's talk numbers here and let's talk rates. The average interest rate for a new car is currently 7.3%. For a used car, it's 11.5%. That's according to data from Edmunds. So, Romaine, that means that bills are up to $739 for a new car and $549 for a used car on average.
And we should point out, we spent a lot of last year talking about that increase in those payments. And of course, now we're starting to see the data of how it comes back to bite some folks. We are getting some earnings crossing the wire. This on the trucking company, J.B. Hunt, a big miss on the bottom line. Second quarter earnings per share coming in at $1.32. The street was looking for $1.48. On revenue side, also a miss, $2.93 billion in sales. The street was looking for roughly $3.3 billion in sales. You can see the shares, guys, down about 3% in after-hours trading.
Yeah, we knew that the rates were going to be a problem, right? But it was sort of when that trough comes and when they sort of work its way out and how the recovery winds up looking like. It does not look like that recovery coming right now. Those shares down now 4.5%.
And by the way, this is now the 7th straight quarter that EPS has fallen. So it's been a pretty steady decline here. And the big question is, at what point have we reached the bottom? According to Lee Klaskow, spot rates may have rebounded off the bottom, but the supply really needs to tighten for the rates for truckloads to really move higher in a sustainable way.
Yeah, so stock here down almost 3% in the aftermarket. Keep in mind, it's down about 12% here in 2024. So again, some concerns here. Again, second quarter EPS miss, and you look at revenue also coming in light here, Romaine.
I do want to go back to the consumer here. There were some headlines just a while ago on Five Below, the discount retailer, basically saying that its CEO, who's been there for quite some time, since at least 2015, has decided to step aside Joel Anderson to pursue other things. The interim CEO put in place Kenneth Bull, suggesting that this, of course, was not a planned transition. Those shares down, but they also pointed out in releasing earnings here that they're seeing significant weakness as well, which could be interesting, too, against the backdrop of what you guys were just talking about with the car repossession story.
Yeah, shares down 5% as we speak. They fell as much as 5.6% post-market as the CEO stepped down. Tom Velios, the co-founder and chairman, appointed interim executive. Five Below names Kenneth Bull as interim CEO.
You know, we talk about the repossessions of cars and how you miss 3 months of car payments, your car gets seized. It's a bit of a contrast to 2009, where people were talking about how cars are the last thing that people are willing to miss payments on because that is what they need for their livelihood, right? In order to get your job, you need to hold on to your car. Your house, not as much.
Does anyone remember that video that went viral where it was like a car dealership and they were going around asking people what their payments were? And
they're all like over $1,000.
Yeah, it was crazy. It was like $1,000 a month for whatever, souped up, Dodge Charger they had. And I don't know, maybe that was a harbinger that maybe,
But they were like proud of it.
Yes, I know, exactly. So it's just kind of a different mindset. And again, at some point, I guess that comes back to bite you if you can't get out from under it.
Yeah, actually, absolutely. But I think it was interesting what you said, Scarlett, about kind of it's the last thing you're going to let go, right? Because it probably gets you to work and takes care of everything else. So it's a big deal. All right, guys.
You can't rely on the subway?
Not every city has a subway.
Exactly.
We in Seattle last week, we were able to take the light rail, the monorail, and the bus.
That was cool. Your video was really cool on that, actually.
It was fun.
Does that thing go anywhere? I went on it once, and I was just like...
The monorail, it goes between two spots, and it's from the early 1960s.
All right. I'm sorry, I've got to get back to the dating apps. Some of us have some things to do. All right, guys.
You swipe right on Brock.
I thought he was going to take the monorail to Shelbyville.
All right, that is our cross-platform radio, TV, YouTube, Bloomberg Originals, folks. Beyond the Bell, closing bell.
Does Mr. Master know about this?
Shh. Okay. We'll see you same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. You didn't take the monorail last week?
I didn't.
No.
How did I not see your video?
All right, next time.
Did you tag me on it or anything?
I don't know.
I'll have to go back and look at it.
Yeah, I'll show you. It's pretty cool.
You did though play around with transportation. A lot more than
I kind of like
did
to.
some walking. I did.
My wife's a planner, like an urban planner, so
Yeah.
I always like to kind of mess around with public transit.
Was it pretty good?
It was pretty good, yeah. I will say I had a very hard time figuring out how to pay for the bus in Seattle. And did I tell you this?
You couldn't just take your phone. I know you were
No.
stressed about this.
I was.
We talked about it a little bit later.
Yeah, and I asked all these people who were waiting at the bus stop how to pay, and they all said, you need this special card that you need to order. And I was like, can I just give them cash? And two people said, no. Don't worry about it. Nobody pays to go on the bus anyway. I'm like, what are you talking about? So I did get on the bus. I was able to give the driver cash, but it was like $3, and he stopped me at $2. He said, that's enough. Don't worry about it. Just keep walking. I know. I'm like, guys, you got to pay for this stuff or else the system breaks down.
Oh my
anyway,
God. Right, exactly.
That's an entirely different
So
conversation.
let's
we're
talk-
talking a little bit of the consumer.
Yeah, let's do it. We heard from B of A CEO Brian Moynihan sitting down with our David West on the health of the economy and the consumer. We did talk about retail numbers that came in for the U.S. for the month of June coming in stronger than expected. So we wanted to get a little bit more insight when it comes to what's going on with the consumer in the retail space.
Mary Lou Gardner is Associate Partner for Consumer Packaged Goods, Retail, and Logistics at Infosys Consulting. She joins us from Florida. Mary Lou, how are you?
I'm great. How are you, Carol and Tim? Nice to be here again.
Yeah, it's good to see you again.
It's that kind of a day. We feel your pain.
But we are having this we're having a really interesting conversation today about sort of the two different economies that we see here in the U.S., especially in the context of the way that consumers feel versus what's happening in markets and what companies are saying. And I'm wondering about the picture that you can paint for us over at Infosys and tell us what you're hearing from the CEOs you talk to.
Well, I think it's a mixed bag even from the CEOs that we're talking to, depending on the business that they're in at the moment. But, I didn't hear all of your conversations earlier, but, we see the retail sales came in flat to the previous month, and that was better than expectations, but it's still not tremendous growth. And people are concerned, the CEOs are concerned about the continued value conscious consumer thinking about trading down, what do they have in their wallet, which we've talked about before. And, we've also talked about, but it's becoming even more evident because of the default on credit cards, is that the lower income consumer, used up their savings post-pandemic. And so they're using more and more credit cards. So that's the part that makes people nervous. But then on the flip side, we've seen the moderation in inflation, and we've got kind of steady, real income growth. So we've got this combination in retail that says, if I've got the perfect storm in terms of my promotion strategy and my pricing strategy and my marketing strategy, can I win in this market and win the heart of that consumer? So they're confident to shop with me and still feel like they're getting the value, and that value conscious consumer is the one that people are probably most concerned about at the moment.
Gotta say something, Mary Lou. I am someone who likes my products. Tim's traveled with me. He knows I carry a lot of stuff with me. Having said that,
it's great because if I have anything that I can't carry on, I just give it to Carol
he's like,
to
you
put
got
in her
room.
luggage.
I did that last trip.
Yeah.
No, but I'm just saying I'm pretty loyal to brands. For the first time in my life, I am buying no-name brands, store brands, because I think the brand names are ridiculously expensive. And I find it interesting. And I just do wonder, why is it? I understand inflation isn't going up as much as it was, but are the costs still so much for companies that prices aren't actually coming down?
What
Help me
has not
understand that.
translated yet is the cost of doing business, right? The supply chain costs are still through the roof. The labor costs have not. It's not like we're all of a sudden going.
What are the supply chain? What are the supply chain costs in particular? Because we hear from a lot of folks that the supply chain's kind of back to normal.
Well, it's not completely back to normal. There were still, several disruptions even in this past year, even with the Baltimore Bridge collapse, and there have been a number of other things that still contribute to the the disruption, but also the costs associated with it, because the labor costs still have not, they're not going down as prices are coming down. What people are paying truck drivers and people that work in the warehouses, that has gone up, right? So we've had this steady, movement in the real income growth, but we're not going to start taking away money from those individuals because we still have a labor shortage in a lot of those industries. So some of those costs are very real. And then also just on the, the manufacturing side for consumer packaged goods, all of a sudden, the raw ingredients that they're using to manufacture plastics to put, detergent in, or the raw ingredients on the, making food in the food manufacturing industry, they haven't gone down yet either. So there needs to be, this kind of whole level set, but it's very hard to say I'm going to start taking money out of consumers' pockets by taking their pay down in order to kind of, correct the market. So,
Can we ask you one thing in reading in and prepping for this segment, and you shared this with our producer, Paul Brennan, and it is about what retailers like Costco are doing in terms of offering up advertising space on their e-commerce platforms to diversify revenue streams. So they're offering it up to other sellers of goods?
Correct. It's been something that's been happening for a while. Walmart started it quite a while ago, but it's starting to take off, in more and more retailers in order to make sure that, they're getting more revenue. So the products that they're selling are getting advertising space, but then also kind of that whole marketplace mentality when you're trying to, compete with the Amazons of the world. You've got to figure out ways to create at least some type of way that you can generate revenue in that marketplace mentality. So you may just be clicking them through to another way to buy something and to advertise and to, maybe potentially give them a promotion. But it's just a way to generate more income for the retailers like Costco of the world.
Hey, I want to talk Prime Day because we're in the midst of Prime Day right now.
Good, yeah.
And it seems like nobody's talking about it except for Amazon. Do you feel that way, Carol?
I absolutely feel that way. I mean, there's been times in my household where I was like, oh, it's Prime Day.
Yeah, it's just not on radar. Anecdotally, it's not on. Is that because, Mary Lou, this is like a normal thing now? It's Prime Days and, people don't really care about this?
Right now, though, so I mean, if you look at it, Walmart and Target have really started circling the wagons. They had their Walmart deals that went, that went from the 8th to the 11th, and Target had their Circle Week from the 7th to the 15th, right? So they're trying to compete with Amazon, but Amazon is still predicted to have 59% of the online spending in the next, today and tomorrow, right? The 2-day event. And they're predicted to sell $14 billion. I don't know why we're not talking about it, because that's a lot of money. And up 10.5%, I believe it is, to last year. So it's still happening. I think there are a lot of it. I'm a Prime member, but I shop on it all the time. So I don't have anything on my shopping list necessarily that I felt was urgent. Maybe some cookware. Other than that, I don't have anything right on my mind. But there's still going to be a lot of spending happening.
All right. Well, I'm sure tracking the numbers when it's all said and done, it'll be a story, no doubt. Mary Lou Gardner, thank you so much. Be well. She is Associate Partner for Consumer Packaged Goods, Retail, and Logistics over at Infosys Consulting. Coming up next, a deep dive into understanding public hospitals.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. An epic rotation on Wall Street today. The Dow, the S&P, both are records. NASDAQ advanced as well. Let us begin, though, with the Russell 2000 index of small cap shares. That today was up by 3.5%. To put that in context, S&P up 0.6%, at a record up 36 points. The Dow closing in on 41,000, ending today at 40,954, rallying 742 points, up almost 1.9%. And again, the Russell 2000 worth repeating, up 3.5%. 10-year, 4.15%. The 2-year, 4.42%. Spot gold up almost 1.9%, up $45 the ounce to $24.67, while West Texas Intermediate crude oil down 1.3%, $80.84 for a barrel of WTI. Bottom line, records today for both the Dow and the S&P. Elon Musk says the headquarters for X and SpaceX will both relocate to Texas, with the billionaire citing frustration over laws in California, where the companies are currently based. Meanwhile, Tesla is looking to hire nearly 800 new employees, 3 months after CEO Musk hastily ordered the largest round of layoffs in the company's history. Tesla today up by just about 1.5%. So again, recapping here. Major rally underway today with the Dow surging 742 points, up 1.9%. S&P up 0.6%. NASDAQ held on to a gain, up 0.2%. Russell 2000 up by 3.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Well, our next guest is a doctor, but modern medicine nearly killed him. He tells this story in the opening pages of his new book, Telltale Hearts, A Public Health Doctor, His Patients, and the Power of Story, which is out now. And to say it's gripping is an understatement. Neither Carol nor I could put it down as soon as we started reading it.
Yeah, to be fair, we've been talking about it in the newsroom. We're joined by Dr. Dean David Schillinger. He's director of the University of California, San Francisco Communications Research Program. Once again, his new book is Telltale Hearts, A Public Health Doctor, His Patients, and the Power of Story. He does join us from San Francisco. Dr. Schillinger, it's so nice to have you here on Bloomberg Business Week. Take us back to 2010 and the episode that nearly killed you, because I do feel like you make a point of putting it at the beginning of the book. It's an important story. Take us back there.
Yeah, the reason that, first of all, thank you for having me on your show. The reason I put my story up front was not because the book is about a doctor who got sick and saw the light on what it's like to be a patient, but rather to make the point that a lot of the illness and burden of disease that we see in the United States that drives the healthcare costs that are so burdensome is a result of unhealthy exposures in our country. And in my case, I was unfortunate enough to have two nearly simultaneously exposures that got me quite sick. One was I was clearing a fire road with my sons, not knowing that the branches and trees that we were clearing were pure poison oak. That led to a case of severe red man syndrome, where my entire body reacted in a severe allergic fashion. And that exposure led me to be exposed to another unhealthy exposure, which is prednisone, which is a high-dose steroid meant to reduce my immune system's response, and it did that quite well, and I was able to get through the red man syndrome. But a while later, one of the known side effects from high-dose steroids, these are like chemotherapy level steroids, is that I sustained an episode of major depression that got me really unable to work, unable to function, and so severe that I had thoughts of suicide. And while I was very well positioned to get outstanding care because I am a physician, I have good health insurance, and I could navigate the system, for most of my patients, and I work at a public hospital, the series of exposures that are unhealthy that they have been subject to over the course of their lifetime are much more profound and numerous than mine, and their difficulty in accessing high-quality health care is much more challenging than I had to face. And so the rest of the book is dedicated to the stories that I've elicited from my patients over the course of being a primary care doctor for over 30 years as a public hospital primary care physician, and trying to demonstrate how important exposures rather than personal choices are to explaining the high burden of disease in our country.
But I also feel like it was an important conversation that you had with, forgive me, I'm not going to get his title correctly, but a therapist, right? That ultimately in having a conversation
Dr.
with
Duncan,
him,
yeah.
that it came out, which I think speaks to a bigger, broader topic. I think a lot of us talk about our doctors don't have time to actually have conversations with us and understand our environment, our full picture. And it sounds like he got the full picture and helped you figure out exactly what was wrong and get you to a much better place.
Yeah, what he essentially did is he elicited my story, and that's why in the title of my book, "The Power of Story" is, the last part of the title. It was his ability to sort of push the chart aside, the medical chart, the biomedical chart, and ask me in my own words what I thought could be causing my problem. And I had my own theory related to the steroids that had not been fully fleshed out with my other physicians. And it was his curiosity, his experience in having worked as a psychiatrist in a cancer center where a lot of people are exposed to high-dose steroids that led my story to be uncovered. And really the thrust of my book is how important the elicitation of patient stories can be in terms of understanding their lifetime exposures, their social and environmental conditions, all of which determine their health and health trajectory and whether or not they will recover from their illness.
Narrative medicine, I think, right, is what they call it.
But it's not a system.
Yeah, there is a form of this that's called narrative medicine. Exactly right.
Doctor, yeah, go ahead.
Yeah. Well, what I was going to say is that we are so, I don't want to create the false impression that medicine should all be about storytelling. That would bring us back to the Middle Ages. Really what I'm trying to demonstrate is the importance of the alchemy between story and science, that when we combine the best of science with the best of listening to patient stories, we can get to the answer much more efficiently, much more cost effectively. And then when we aggregate these stories together in what I call narrative epidemiology, we begin to see the larger patterns that are causing disease in populations, not just individual patients. And so bringing together story and science is really what the thrust of this book is about.
That approach, though, I'm afraid, at least in my own anecdotal experience, is the exception and not the rule. For example, next week I have a dermatology appointment that I've waited months to be able to schedule, and I was able to schedule it within 15-minute increments. So I know that the maximum amount of time I'll have with this doctor for a full body check is 15 minutes. And I certainly have a list of things to talk to him about, but it makes me think that, the system that we have when it comes to medicine in this country, it's not one that's conducive to this idea that you espouse in the book.
I couldn't agree with you more. I mean, this book has a number of points that I make that are quite subversive in terms of being critical of the current system. That said, I think one of the problems in the current system that is most severe is the lack of access to primary care physicians. Now, I'm a primary care physician. I too have 15 minutes with a patient, and I just don't have to deal with their skin. I have to deal with their entire body. But I also can do it over the course of many, many years and get to know the patient intimately well and be able to elicit story over time. But I think until and unless we get to the point where we prioritize communication and conversation as much as we prioritize, and here I'm talking about financially prioritize, the ordering of MRIs and highly costly medications and tests that we do in lieu of the conversation. So, I instead of asking the patient about the realm of symptoms that they might have about the knee pain, I just order the MRI, boom, and I move forward to the next patient. That is not cost effective. We are wasting dollars when we do that as a nation.
Well, and it's kind of interesting because we all have stories about how our healthcare system is broken and the problems. And it sounds like the fix, what we really need to do, what would you say? We've got about 40 seconds and then we'll come back and talk some more. What we really need to do to improve health, fill in the blank, would be what?
Well, what we really need to do to improve health is to improve the social and environmental conditions in which we are all living, particularly those who live in poverty. So that's the big picture with respect to health. If we're talking about what we need to do in healthcare, it's that we need to prioritize the so-called cognitive disciplines in medicine to be reimbursed at rates that are equitable relative to the disciplines that are more technical and invasive in terms of the procedures that they do. So that I frame in the book the medical interview as the most important medical procedure we do as physicians, as potent as the surgical knife. And if we start to value that equally, we're going to begin to see changes the likes of which you're referring to.
All right, we're going to continue with you. Do not go anywhere. We still have a ton of questions. We're going to continue with Dr. Dean David Schillinger. He's director of the University of California, San Francisco Communications Research Program, talking about his book, Telltale Hearts.
Let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99 newsroom in D.C. Hey, Amy.
Hi, Tim. We're learning the Secret Service increased security around former President Donald Trump after obtaining intelligence in recent weeks of an Iranian plot to assassinate him. Officials say there's no indication there's any link to Thomas Matthew Crooks, who was accused of shooting at Trump at a rally on Saturday. House Oversight Committee Chair James Comer has announced that Secret Service Director Kimberly Cheadle will be appearing at a public hearing next week as the agency faces more intense scrutiny after the shooting on Saturday. Members will be briefed by Secret Service. Investigations are underway in the Senate as well. Cheadle called Saturday's shooting unacceptable. She says it is her responsibility as head of the agency to investigate what happened and make sure it does not happen again. New Jersey Senator Bob Menendez has been found guilty of corruption charges related to the FBI seizure of 13 gold bars, nearly $500,000 in cash, and a Mercedes-Benz at his home. Menendez says he was disappointed in that verdict.
I have never violated my public oath. I have never been anything but a patriot of my country and for my country. I have never, ever been a foreign agent. And the decision rendered by the jury today would put at risk every member of the United States Senate in terms of what they think a foreign agent would be.
Now, Menendez was convicted on all 16 counts after a 2-month-long trial in New York, where prosecutors argued the lawmaker had sold his influence to protect businessmen and to promote Egypt's interests. The judge set a sentencing date for October 29th for Menendez and his two co-defendants. Menendez is expected to appeal. Senate Majority Leader Chuck Schumer, meanwhile, is also calling for Senator Menendez to resign. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
4:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks hotter than the temperatures on Wall Street today, with equity markets sizzling. Stocks climbing to records as bets the Federal Reserve will soon start cutting rates fueled a rush into riskier corners of the market. Right to the numbers here, with the Dow Jones Industrial Average at 40,954. The Dow rallied 742 points today, up 1.9%. S&P up 36 at a record 56.62, a gain of 0.6%. NASDAQ advanced 36, up by 0.2%. The outperformer by far, Russell 2000 index of small cap shares up today by 3.5%. 10-year 4.15%, the 2-year 4.41%. Spot gold up 1.9%, 24.68 for the ounce of gold, while West Texas Intermediate crude down 1.3%, 80.87 a barrel. Bottom line here, an update for the Dow, the S&P, NASDAQ records for both the Dow and the S&P. But what about the economic backdrop? Christy Akulian is head of iShares investment strategy at BlackRock, and she was the guest right here on Bloomberg Business Week.
We've really taken out a lot of that left tail in terms of the recession risk. And so we've seen the economy, it stayed a lot stronger than expected. And I think that it's in a really benign deceleration mode right now. So we do expect growth to slow, but we don't expect it to slow so much that we're going to get that bumpy or that hard landing that maybe investors thought we were going to get in December.
Christy Akulian of BlackRock. Fitch Ratings has raised Delta Airlines out of junk territory, making the carrier a so-called rising star with a second investment-grade rating. Delta, along with a lot of other airline stocks rallying today, Delta up by 7%. Again, recapping records on Wall Street, S&P up 36, up 0.6%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get right back to our guest. We're talking about Dr. Dean David Schillinger, Director of the University of California, San Francisco Communications Research Program. His new book, Telltale Hearts, A Public Health Doctor, His Patients and the Power of Story. He is still with us from San Francisco. Dr. Schillinger, I want to ask you why tell our audience it's important to understand what goes on in the nation's public hospitals. We talk a lot with doctors. A lot of them are more, I guess you would say, private institutions. Why is it important for us to understand what goes on, what you have seen at a public hospital?
Well, first of all, I'd say, our prior conversation was really focused on health policy and sort of policy wonk talk. But the book itself is full of really wildly entertaining and compelling stories, and I think really will grip the reader by learning about the kinds of experiences that patients in public hospitals have been exposed to that lead them to become ill. And public hospitals are really just the tip of the iceberg for the rest of the country's ills. It's really the only place where healthcare meets social reality, and they're hidden from public view for the most part. We think of public hospitals as the place where those people go to get their care, rather than the place where the kinds of health disparities that we observe also are relevant for many of the rest of us in the form of a health gradient. So this book is really not just about the bottom 10% of the United States, but really is about everyone except the top 1% in the United States in terms of how health happens and how healthcare quality can suffer when we overly rely on technology and not elicit the patient's story.
Well, speaking of patient's story, early in your career, you wrote about one of every 2 patients you admitted were dying of an AIDS-related illness. So early on, you were on the front lines of that. We actually interviewed Dr. Fauci a few weeks ago on his new book. He spent much of his career treating patients with AIDS. Like 70% of the book is about that early part of his career, although he's known for COVID. Talk a little bit about that experience and what it taught you about being on the front lines of this, at the time, sort of newish disease that was only affecting a portion of the population in San Francisco.
Yeah, I mean, these were very formative years. And in the book, it's quite clear that I was quite young and naive and unprepared, as were many of us, for the horrors of accompanying young people, young men, many of them our own age, to their death without the kinds of tools that we're used to having, and that we were so fortunate to arrive at so quickly with the COVID epidemic. I mean, it took us a good 15 years with the HIV epidemic before we were in control of some effective medications. So for me, I think I learned how easily one can slip into a form of dehumanization when you don't really understand what the other person is going through, and how absolutely important it is to understand who the person is behind the patient and behind their symptoms. And for me, that was the ultimate lesson, which is my patients are not just a series of symptoms, but they are people who have families, who have histories, who have stories. And that once I understood that, I could approach their suffering or their recovery in much more humanistic ways and with much greater caring than if they were just a series of numbers. And I worry that today we often categorize people as having syndromes with certain numbers and certain technical characteristics, treating them as some people have called eye patients, as electronic patients almost, and that ultimately medicine is about one person connecting to another.
Well, Dr. Schillinger, you know, that's what struck me. Your book, your patients have names. It's not just patient X, patient Y. It's Mrs. Johnson, it's Melanie, it's Mrs. Jimenez, it's Mr. Q, who you say was one of your most frustrating patients, yet one of your most treasured. You remind us that it's not just a patient and a file that a doctor picks up. It's a human being that has been living in certain conditions with certain ailments, who has a specific story that is crucial to their health outcome.
Yeah, that's exactly right. And, you know, the HIV epidemic was just one of many epidemics, and our patients are living through numerous contemporary epidemics, most of them non-communicable diseases like diabetes or exposure to secondhand smoke that leads to lung disease or cancer. It's not always the dramatic infectious disease that they have. And they get these diseases because they don't have the luxury that many of us do to eat the kinds of foods that we know are healthy, or breathe the kind of air that we know is healthy, or live in the kinds of neighborhoods that we know are healthy. Many of my patients are subject to very little choice in that regard. And in fact, I show in the book how many of the health outcomes that we see are a direct result of policies that the U.S. government and the U.S. banking system pursued as it relates to redlining, where people of color could purchase homes or not purchase homes, where they could get a mortgage or not get a mortgage. That 75 years later is still determining who lives and who dies in which neighborhoods in a city. And it's quite compelling to see that kind of through line still existing so long after the laws have changed. So it really makes the argument that if we're going to improve health, we have to take a step back, listen to patient stories, bring those stories together, and change public policy, not just health policy, but social policy.
All right, just have about 30 seconds left here. So we're all kind of listening and thinking, okay, wait, so what do I need to do as a patient to make sure I can improve my health? And forgive me, because we only have about 30, 40 seconds left.
I think as a patient, we need to be proactive in telling our stories to our physicians. We don't have to be so deferential if we get cut off. It's okay to gently state our case. And I think we need to value more the ways in which our communities are designed, the ways in which our food system is created, the ways in which transportation is done. All of these things are going to influence our health in much greater detail than what we eat for dinner tonight.
So appreciate the time with you. Dr. Dean David Schillinger, thank you so much, Director of the University of California, San Francisco Communications Research Program, author of his new book, Telltale Hearts, Public Health Doctor, His Patients, and the Power of Story. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Amazon's Prime Day sales rose almost 12% in the first 7 hours of the event compared with the same period last year. This is according to Momentum Commerce, which manages 50 brands in a variety of product categories. Amazon shares a little change, but higher today. We had Amazon up by just about 0.2%. Bank of America missed estimates for net interest income in the second quarter, but said the key metric would climb by the end of the year. NII is one of the bank's biggest sources of revenue. Bank of America CEO Brian Moynihan stopped by Bloomberg World Headquarters today to talk about the quarter with our David Weston, who asked him about the rate cut outlook.
Our company's projection, our research team, which is terrific, Candace Browning Platt, the research team, best research team, has really won this year. They had just in their last report said we're probably going to come off of that. So like they usually do, I get on TV, the next day they change it. But the market's at 3, we're at 1, somewhere in that. So where they'll come out is my guess.
Brian Moynihan, Bank of America chairman and CEO of the stock, today after earnings up 5.3% in the year-to-date category. Bank of America is up by 31%. Morgan Stanley's traders joined the party across Wall Street in the second quarter, posting gains from a year earlier that beat expectations, even as the firm's larger wealth business fell short of estimates. Morgan Stanley today up by 0.9%. Heading in the other direction, though, Charles Schwab, it reported that fewer clients opened new brokerage accounts with the investing giant that analysts had expected. That sent shares of the company down today. We had shares of Charles Schwab ending the session lower by 10.2%. For the year, the stock is down by 2%. Those are our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. Let's get a check on the latest world and national news. We got Amy Morris in the Bloomberg 99.1 Newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. We're learning the Secret Service increased security around former President Donald Trump after obtaining intelligence in recent weeks of an Iranian plot to assassinate him. Officials say there is no indication there's any link to Thomas Matthew Crooks, who's accused of shooting at Trump at a rally on Saturday. Law enforcement is still trying to establish a motive for the assassination attempt on Donald Trump. Secret Service Director Kim Cheadle called the shooting unacceptable, telling ABC her agency promises transparency in that investigation.
And we want to make sure that we examine everything from start to finish. And if we need to change our practices, we will absolutely do that. The buck stops with me.
House Oversight Committee Chairman James Comer says Secret Service Director Kimberly Cheadle will be at a public hearing next week. The agency is facing more scrutiny after that shooting. Senator Bob Menendez, the powerful New Jersey Democrat, was found guilty of corruption charges related to the FBI seizure of 13 gold bars, nearly $500,000 in cash, and a Mercedes-Benz at his home. Menendez says he's disappointed in the verdict.
I have every faith that the law and the facts did not sustain that decision and that we will be successful upon appeal.
Menendez was convicted on all 16 counts after a 2-month trial in New York. Prosecutors argued that he had sold his influence to protect businessmen and promote Egypt's interests. Jurors reached their decision after about 3 days of deliberations. So now the judge has set a sentencing date for October 29th for Menendez and his 2 co-defendants. He is certain to appeal. Senate Majority Leader Chuck Schumer is now calling for him to resign from the Senate. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. Back to Bloomberg Business Week with Carol Masser and Tim Stenevec.
All right, Amy, thank you so much. Tim and I getting ready to wrap up here of the Tuesday edition of Bloomberg Business Week. Having said that, there's so much going on. Politics, we've talked a lot about it. The economy, always important. Earnings, bank earnings, other earnings, some earnings after the close. Charlie's been all over it. And yet, when there's a real estate story of somebody buying a really expensive property, it always pops up among the most read. We talked about Lux and high-end real estate earlier today.
This one has to do with, I'm pointing at Paul Brennan because this is about Massachusetts. His home state. The former Citicorp CEO, John S. Reed.
Yeah.
Selling.
Kind of an iconic, go back to Citicorp before it was Citigroup.
Yeah.
Yeah.
Selling a $40 million oceanfront compound on the Massachusetts coast.
Yeah, exactly. So wait, what
this
is
is according.
he doing?
This is according
Wait,
to.
So what is he selling?
Okay. Okay. They bought this Duxbury parcel back in 2004 for $10 million. This is from the Wall Street Journal.
Right, oceanfront.
It made it their primary home. They spent the next years buying up neighboring properties, building a compound with multiple structures, orchards, and gardens. Now, Carol, according to the Wall Street Journal, they're putting the property on the market for $40 million. It's the highest price listing in the state. Duxbury, Paul?
Duxbury?
Brennan? Yeah. When I was in college, they used to call it Deluxeberry.
Did they really?
Yes, they did. Paul's saying no.
No?
I went to college in Maine with a lot of people from Massachusetts.
Well, Deluxeberry it is because it's got a pool. It's a compound, folks. It's got a pond,
I hope it has a pool.
and a sandy beach on Cape Cod Bay, according to the Reeds. Among the structures is a 17th century cottage with 2 bedrooms. Main house built in 1996 is about 14,000 square feet with 6 bedrooms. Count it.
Duxbury is described by the Wall Street Journal as an affluent suburb of Boston. It's got a population of about 15,000. Luxury properties there usually trade in the $10 to $14 million range. That's according to Joanna Dresser